The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the June 8th wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go look at the circumstance of these markets, what the bulls and the bears, the buyers and the sellers are communicating to you and I at just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence. There's no doubt about that. But more importantly, folks, I am here to serve you. So feel free to call in. Now it's not too early at 877-927-6648. Of course, internationally, 727-445-1044 on this wonderful Wednesday. Let's go ahead and get things kicked off. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we have the Dow trading up at 17,985. That's up 47 points. The S&P is up about 6 points, trading at 2118. NASDAQ Composite up 15 to 16 points at 4977. Russell 2000 on the move. It doesn't care that the NDX, that the NASDAQ is struggling a bit out here. The Russell is on its move. It's trading up 8 points at 1188. DAX closed off 70 points, the FTSE up 16. Gold is up $16. Silver's up 61 cents. Nice move in silver today. Hi-ho, silver. You've got light sweet crude trading out at $51. Even Steven out there, that's up 65 cents. To the upside, individual stock-wise leading the charge. You've got Google up $10. Allegiant Travel up $9. Intuitive Surgical up about $9. Mettler Toledo International, that's up about $6. Rand Gold is up $5. To the downside, Verifone Systems, ticker symbol PAY, that's off 7% and 25%. That sounds like they're not paying out the shareholders today. Chipotle, that's down $6, about 1.5%. You've got, what do you got here? You've got Public Storage off $6, Regeneron down 6, MTS Corp or Systems, that's down 5. So lots for us to take a look at. But the first thing that we want to take a look at is what Michael in Omaha. Is it Michael that's on the line? Hello? Do we have Michael from Omaha? Maybe it's not Michael.
Hello?
There you go. Is it Michael?
Yes.
Okay, perfect. Hey, Michael, how you doing this afternoon?
I'm good, and how are you?
I'm doing very well. And you're interested in taking a look at crude oil?
Yeah, I called a couple of weeks back when it was at 48, and I figured it would be testing the 50.92 previous swing on a continuous contract. Do you show any movements going up, this less relative weakness or strength?
Well, here's what we can take a look at. So with regard to the new move higher, with regard to being able to take and trade above the May 26 swing point, and I'm looking at the July contract out here. That price high was 50.21. Today, we've seen light sweet crude trade up to as much as 51.34. On that move higher, it is moving higher with strength, so to speak. So that says that what light sweet crude is continue and probably go try to run for the swing point all the way back in November 3rd, 2015. So that next level is right around 52.25. That's not much of a move beyond where it is. But, you know, Michael, I don't see any reason at this stage. Well, I'll show you one reason. But other than the one reason, and assuming that that doesn't really come to fruition or cause a price to really pull back, there's no reason for light sweet crude to not move up into the $55-ish area, which is the top of this second rising price channel that in essence has formed. When we take a look at prices either moving sideways or moving diagonally up or diagonally down. Can do both as well. In this case here, when we take a look at a rising price channel, that would be the lower red lines out here. That really formed a nice little top level held as resistance. Once price broke through there, that level was tested and rejected as support. So at this stage here, longer term, or shorter term, because it's a daily chart, I suppose there's no reason for this to not really try to move. It looks like all the way back to this little swing point high from August 31st, and that price objective is about 54.41. With regard to the bottom that light sweet crude made, it was moving lower with less relative weakness, and that was back here. We can see going all the way back to February the 11th, and the real signal that light sweet crude with regard to this pattern had completed was when the bulls showed up, and they formed that nice little bull sash candle on February 12th. That told us that the cavalry was there, and that if there was going to be an attempt to form a bottom, then that was it. And that's what it proved to do. That was the bottom. Now we can see that price is moving higher, but we do not have that same type of topping pattern. What we may have that is at least worth paying attention to is that if we take a look at the swing point from April 5th, and we start counting waves, start using our Chapman wave system to count the higher peaks out there, what we're going to see is that today's high, actually yesterday's high as well, so we're just carrying forward this, you are in that potential seventh inning stretch. And so, you just have to have some reasonable caution out here. But at this stage of the game, as we speak at 1:12 in the afternoon, everything looks bullish and nice trade out there. Where are you thinking of getting off this train, if at all?
I'm thinking it might be a little extended right now. It might be pulling back, so I might be rebuying it when it pull back to the retracement.
Got it. Okay. At this stage, everything looks really pretty good on this. I don't see, I can't tell you where I would tell you where the sellers were hanging out if I could see them on my chart. But with regard to TAS market profiles, they're nowhere in sight. If we take a look at daily and weekly, if price was moving higher, doing a less relative strength, I'd say, okay, that's a cautionary sign. That's not what we see out here either.
The 30-minute charts, do you show any type of reversal candle?
30-minute charts. Okay, so now in the 30-minute charts, if you bear with me, let me go switch over to a 30-minute chart out here. Let me go ahead, because then we can also see on an intra-time period basis. So we're going to look at the July 2016 contract. Give me a moment here for the data to load. And no, everything looks pretty good there as well. Let me do this for you on this chart. You're asking, your question was, do I see any kind of reversal candle? Was that the actual question?
Yes.
And the answer would be, yeah, let me do this. Let's do this here because it might be easier for you to see. Let me see if I can do this here. I just want to put the 30-minute profiles on this system for you because on the eSignal software, it's going to give me a profile, TAS market profile that I'm more comfortable with. So you got to give me just a moment here to change that, and we'll turn off the weekly. Hey, Michael, can you hold on through this break here?
Yes, please.
Okay, so we'll go back to Michael. We'll go take a look at a 30-minute chart here for light sweet crude. This is Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We're on the line with Michael in Omaha, Nebraska, who's got a great trade on in light sweet crude. We're looking at a 30-minute chart, and his question was, do I see any reversal candles, not patterns, but we're going to answer both those questions. Do I see any of those on a 30-minute chart? What we're looking at, if you're watching us on TigerTV, these red horizontal lines on our screen, those are our TAS market profiles. Those are the kind of the hidden signals of support and resistance. And what we can see is this top red line, which is priced out at 51.12. It has acted as some pretty good resistance out here for light sweet crude, Michael. And with regard to reversal candles at the top of that resistance level, that's where the sellers would be camped out, so to speak. You can see between 8 and 8:30 this morning, there was a little bearish engulfing candle. There was another bearish reversal signal here just a little while ago, 12:30. That just says that this is a level that is a hurdle that light sweet crude needs to get above. The way that this box is set up, I would be hard pressed to tell you to sell unless we were to see a close, or you were to see a close below $50.52. That's the bottom of that current profile. However, and there is no other, even on a short-term basis, a 30-minute chart, I do not see any kind of reversal signal whatsoever. So the question, however, taking money is never a bad thing. And, you got to go back to what your first outcome was. If you've already achieved that, then maybe greedy is not a good thing. But do I see a pullback here? If someone are going to say to me as I looked at the chart, Michael, where would light sweet crude pull back to for its next buy? I'd say 50.52. And so if it pulled back to 50.52, do you want to risk for just about 30 cents or so, 40 cents actually getting out of the trade?
Maybe pull back maybe a little further. Maybe from in the 49 area.
Yeah. Well, if it's going to pull back further than 50.52, you'll see a close underneath that price level. And that would be your first signal, which we haven't really seen here for a while. That would be your first signal that might happen. And then you could say, if I go back to my daily time frame chart out here, then you could say, okay, price might come back to the top of that little rising price channel. Where that's going to be priced at when that occurs would probably be in your $49 area, give or take out there. So I hope that helps you out. But do you have any other questions before you leave?
I appreciate your clarity.
My pleasure. My pleasure. And thanks so much for calling. That was Michael in Omaha, Nebraska. And that was taking a look at light sweet crude out there. Now, let's go take a look at these markets. I see some other questions in the den. I see a question here. Well, Steve, what do you think about the NASDAQ 100, up or down? Well, let's go take a look at the NASDAQ 100. But let's start off by taking a look at, we've been in the same place here for seven, now almost 8 trading sessions. When I say in this same place, let's go take a look at the daily NQ contract out here. What we have is a series of very small-bodied candles out here. You go back really to the trading session of May 31st. Since the end of the month, the NQ has done nada. Now, as we talked about yesterday, once price cleared the resistance on May 31st of its weekly profile, looked like it was ready to head up to 46.35. But lo and behold, a few days later, here on the trading day of June 3rd, brand new market profile appeared. And that level, the top of that box, 45.3875, is the resistance level. If the NQ is going to move higher, the NASDAQ 100, I should say, if that's going to move higher, Joe, you're going to see price get above 45.3875. And then maybe this little coiling routine that is going on here will probably move higher, will move prices higher considerably. Now, if you were to see a price below 44.5995, then I would give you the thumbs down out there, and that the NQ is finally given us a directional signal with regard to where it wants to go. Now, is it just a retracement? Is it moving back to the swing point here from May 6th? I don't know. We'll take that when that occurs. Which one is more likely to occur out here? A move higher or a move lower? Because really, isn't that the question out here? And that's the signal. If I put up the NDX 100, let's go take a look at the Qs as an example. We'll use that for a barometer, since most of you have the chart here for the Qs. If we take a look at what does this tell us here, let me get rid of those 30-minute profiles. We don't want that decorating our chart out here. We'll turn back the TAS profiles later. But as we take a look at the Qs, here's what we know that it is doing. There was a gap down on April 22nd, 39 million shares. And as soon as price closed above the low of that gap, which was April 21st, that was 110.15, that window was repaired. That little falling window, sometimes you refer to it as a falling window or a rising window if it's a gap up. In this case here, it was a gap to the downside. But once price closes above that level, you have repaired that window. What does that mean? That means that, in essence, it no longer becomes a level of resistance. Now, old resistance, which is 110.15, can become new support. Well, that's really what we see that is going on here right now. At this stage of the game, what we can say is that support is holding at 110.15. An early signal might be a close below it. Now, I'm not talking about like closing at 110.12, 110.10 or something with some kind of significance out here. What's more likely to happen, we can also see that price inside the QQQs is trading inside this swing point here from April 19th. So it has not broken through, and you would need to at least see it close below that level, which, by the way, is 109.88. So close below 109.88. We know we're up here with light volume. That would be a rejection of a swing point on price and volume. That could be sending the message to you. But otherwise, it should be the high that gets tested and maybe taken out. 111.44. I would say taken out if the NQs are able to close above that daily market profile. Now, to the question, what is likely to happen out here? Well, if we take a look at the advanced decline oscillator for the NASDAQ composite out here, I showed you yesterday a potential, as I said, potential issue that could easily be resolved. And what I'm referring to is the high that was formed on June 2nd, both the high in price as well as the high in that advanced decline oscillator. Now, that's not the advanced decline line. Totally different thing. That's the advanced decline oscillator. That's the difference between two exponential moving averages out here. Let's not go into the math. Let's go into the meaning behind the scene out here. And that reading was 147.30. Right now, you're trading at 141.77. What's key is that if today you're going to see it close above 147.30, maybe it's tomorrow, who knows? But if you see it close today above 147.30, that little divergence or potential divergence will have gone away. And if that goes away, and when I say divergence, it's because the NASDAQ composite has been able to attain higher price without this indicator confirming that. Now, until that happens, it's kind of a neutral-ish type message out there to us. So what are we going to fall back on? What we're going to fall back on is the tool that Steve-O here is going to be teaching folks about in my course next Tuesday between 6:30 and 7, called the Oscillator Unchanged line out here. It's the line that every trader, I do not care what level, what skill level you are at, you want to sign up for this class. You know, I bring things to you that most people don't, so it's always worth the education out there. And an education, you tell me what the value of an education is. In the case of the NASDAQ composite, the level you really got to be paying attention to, and that's as of 1:26 in the afternoon. That could change by the end of the day, but let's just use the level that we've got right now. It's 49.3139. Can I get more specific than that? If the NASDAQ composite does not close below that, its message is that it wants to move higher. And we haven't even taken a look at your New York Stock Exchange. Oh, what a message it has. It says it wants higher price as well. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 32. S&P is up 3. We don't often look at a chart like this on Stevie's screen out here, but we're going to go take a look at this. You might say, what the heck is that? Don't worry about the volume piece of it below. I don't even know where that information is coming from, but I do know the information that we're looking at. Those green bars out here, those represent new highs that have been established thus far inside of the New York Stock Exchange. And today, it has hit a high of 232. The number that you and I are watching for or doble Gee confirmation is going to be the high from May 10th, 253. And we're very close. We got very close, or not we, but the New York Stock Exchange got very close back here on June the 3rd when it got up to 242 new highs. But just notice the mere fact that it's making new highs out there and how important that is. But you take out that 253, and the message couldn't possibly be clearer, and that is that we will see higher prices this summer. Doesn't say that we won't see a pullback or retracement or when that's going to start. But remember, we're trying to pick this market apart piece by piece. And right now we're taking a look at a daily chart out here. So that's going to be important for us to look at. Now, why is that important? I said something yesterday, and it just kind of freaked people out there. I didn't get any emails about it, but I know people were saying, what? What did you just say? I said, hey, the New York Stock Exchange was moving higher with volume out here, confirming the move that we are seeing at this point in time. Now, what was I referring to? Well, let's go ahead and put this chart up here on the screen. You'll see what we're looking at. Well, you're familiar with this chart, give or take out here. And the top portion of the chart out here, that happens to be the New York Stock Exchange. That little red line, that's an important red line. We're going to certainly discuss that at the workshop this coming Tuesday. The line down below it, that happens to be the advanced decline line. Now, the advanced decline line, most people pay attention to that. That's what they really focus on. They don't do the work to take a look at the volume summation index out here, but you and I do. Because we know that doing the work is worthwhile and that it pays off. In this case here, most people just pay attention to the advanced decline line out there. Is that a bad thing? No. Is it wrong? Yeah, you've got to really put it together. You've got to get confirmation from that volume oscillator, that summation index, also being able to make a higher high out here. Well, I can tell you, we're at all-time highs inside the advanced decline line. So, that is strong and long out here. Quite frankly, until the advanced decline line, the summation index drops below my blue line out here. And everybody would have a different blue line depending on when you would start your accounts out here. So the number's irrelevant. The line and where the close is extraordinarily relevant out here. If we take a look at the volume oscillator, the New York Stock Exchange only makes significant market highs when there is a divergent pattern. Do we have that now? Not even close. Not even close. Not even close to a cigar out here. Because we have a higher volume oscillator reading than we did back here. What was that trading session out here? That was back right around, I believe it was April 28th. So we are at a higher volume oscillator in the New York Stock Exchange. There's no diverging pattern here. That very bottom portion of the screen, that really, something new that I've had. You want to pay attention to new highs out here. And it's really also close to what's most important is the AD line and the volume summation index, panels 2 and 3. But panel 4, you get above the higher high that was produced out here. What was that? I think May 9th, May 10th, somewhere right around there, whichever of those dates. Then, folks, that's just a huge signal. Not that there's not going to be a pullback, but that we are going to see higher prices out here. And that is the message of the New York Stock Exchange. Don't let anybody, let them tell you differently. But then you go back to that chart, which you probably went ahead, if you're in the Tigers Den, you probably copied and said, hey, I got to pay attention to Stevie's chart out there because of the message that it has. And that, folks, is its message. A question inside the Tigers Den: has my opinion changed on gold? Well, let's go take a look at gold. So remember, my opinion really wasn't my opinion. Let's take a look at the opinion of guys who have a lot of money at risk out there, referred to as the commercial traders. And if we take a look at what their, whoops, that's the wrong chart out here. Not that that's a bad chart. It's not the chart that I wanted to show. So what was the chart that I wanted to show? It is what were commercial traders doing as of last Tuesday. And the reality is what commercial traders, see this little uptick here on the bottom right here? This happens to be their short position as a net short position as a percentage of open interest out here. Actually ticked up yesterday. So not yesterday, but last week, which was really covering the prior Tuesday's data out here. And they actually were moving to a higher net short position. Now, you can't use this as a timing tool. You have to use other elements as a timing tool. That's why my subscribers and I, who were short gold, who rode that $100 an ounce price to the bottom out here and then exited our trade because of the other tools that we use, because we were anticipating a bounce. And what we were looking for was a bounce and a rejection Did we get that rejection? No. On, what was it, Jobs Friday. Let me go ahead and try to put the contract up on my screen. I'm going to put, for my sake, for purposes, I'm going to put the continuous contract up on my screen out here. But the number is just about, I'll put this up here. Again, this is going to be taught to each of you attending the workshop next Tuesday. As soon as price on Friday closed above that little red line, and that is an important red line, that said you cannot, gold just turned short-term bullish. And you cannot take the short. I was looking for price to get up to that level and that level to hold as resistance, and then if so, then I'd say, okay, we can use that as a timing tool to go with the message of commercial traders. The big money is anticipating that the price of gold is going to go lower out here. Now, can the price of gold go higher? Yeah, we took a look at once this price level was achieved, was pierced on June 3rd. We said not until we see price move below that area is there a problem. Well, what was yesterday? Yesterday was nothing more than a test of that line, a test of support out here. And today it moved higher. Obviously spurred on, I don't know who spurred on who, but really I think it was silver that was spurring on gold out here. But what gold has done thus far, and it's at an area that is worth noting as we take a look at the daily chart, one of the first levels that we took a look at was that gold would go ahead and bounce right up to its descending tops trend line. Now, look, it may not have hit it right to the tick, but my goodness, it's really close. Does that mean it's a short? No, I wouldn't be taking that. I would wait for the cavalry to give me some kind of message out here because price can easily get above that level. In fact, I would anticipate that that's really what gold's next move is going to do. It is going to get above this descending trend line. But where, oh, where is it going to head to? Well, we've got to go ahead and take a look at what our profiles, our market profiles say, because that's really the next level of support and or resistance that we have. So we'll go ahead and we'll turn that on, put that on our screen out here. And that says that what gold is likely to do, that's if it can take out this descending trend line, is get up to 1286. So at this stage here, is there any kind of, so what is my opinion? I'm not sharing with you my opinion. What I'm doing is just simply narrating the story of the storytellers of the markets. In this case here, narrating the story of what commercial traders do. And commercial traders, they're early. They got lots of bazooka power out there, but they are never wrong. And so you can anticipate that what they've got in store is gold headed lower, but not at this momento. So I hope that that answers your question. I hope that that answers your question. Was that Danny in Atlanta? I think it might have been. And if not, no, yeah, it was for Danny in Atlanta. So real key level that gold has to take out, and that's right around the high of today, which would be 1267. Then you can anticipate 1286. You get above 1286, hey, then game on for that swing point for May 2nd. But there is no short message at this moment. Dow's up 33, S&P's up 4, NASDAQ Composites up 10. Hey, we got to come back and take a look at Apple and give Garo the right information on that bad tick from a few days ago. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Now, for our man Garo, who had called yesterday, we were taking a look at Apple, and thanks to AG in the Tigers Den, he was able to spot that I believe it was the trading session from June the 6th, if I'm not mistaken, out here. On my system and many systems out there, we had a piece of bad information, a bad tick. And clearly we got that. I mentioned to you I'd go ahead and get that resolved once I got off the phone, and the folks at eSignal went ahead and did the homework on there, and you can see that the candle session here from June 6th is totally different. Now, what that did was it totally changed, and Garo uses the parabolic SAR system for trading, an excellent tool that was developed by Wells Wilder. You know that one of the things that you and I take a look at is the relative strength indicator. This is also a momentum indicator, and a lot of traders use this. So, you want to be paying attention to it. And whereas because of the data on the trading session for June 6th, if we had used that data, it gave us an actual bullish signal, which is not the case that we have just yet, because we've got these dots out here that really, until they are taken out, until we see a close above, and the current reading that I have, which is that's 100.41, until you see at least that get hit, preferably a close above that level, you don't have a buy signal out here. So, Garo, the high that I have may have been your trading software. I'll just give this to you, 97.99. The low, 97.55. The close, 98.63. And the open, 97.99. And you get with your software vendor if they haven't changed it yet. And those are the numbers that I would feed to them if you can't change it manually out there. So that was for Garo in California. Now, I had mentioned to you that as we took a look at volume summation index for New York Stock Exchange and the advanced decline reading out there, the only concern, and the reason why I say, look, it doesn't mean we go up right now today and we don't stop, but on any pullback, you really want to be looking for an entry point into any kind of a pullback out here. As the retracement or pullback should be brief, should be days, 4, 5, 6, maybe 7 days, something like that, which may be a tradable top out here. I don't see it just yet. We're not seeing the patterns that are normally associated with at least short-term tops that are in place inside of the market, other than the NQ not being able to do anything. However, there are a couple of concerns that we have. And those two concerns, really three concerns out here, potentially three concerns. Here's the Wilshire 5000. Now, brought to us by our man Z inside the Tigers Den, is really the best indice to go ahead and track for U.S. stock markets, because it covers all U.S. stocks that are headquartered inside the United States. So it really gives us a great feel for what's going on in our country out here. And as we take a look at this, price has now started moving higher with less relative strength. In fact, yesterday, what's interesting, yesterday was an actual bearish reversal signal. It was the shooting star. You know its brother, its kin, its next of kin. That's called the hammer candle. And when you see hammer candles at the bottom, you know, hey, could be major bottom out there, especially if it comes at the end of a signal, at the end of a pattern. Well, guess what? Look at this. Came really at the end of a pattern, or potential end of a pattern, as price was moving higher. However, that should be a really significant level of resistance. Now, the high inside the Wilshire yesterday was 21,968.93. You're at 21,957 right now. But if you close above 21,968.93, you know the expression, nothing more bullish than a failed bearish pattern. However, price could still go higher, do it with less relative strength, and so the pattern may just continue. You've got to wait for the cavalry to show up. At this stage of the game, this is just you're not getting any follow-through today. So is this a sellable pattern? Well, you can't actually trade the Wilshire 5000, but it sure is going to give you a really good feel for the market breadth. It's not just the Wilshire that you and I have to be paying attention to. You know, it's a few other indices out here. Indices such as, however, that red line is where the Wilshire ought to find support, which is 21,785.40. If we go take a look at the New York Stock Exchange, since we were talking so much, or I was speaking so much about that, we can also see that it too is moving higher with less relative energy. But was there a bearish reversal signal that formed yesterday? The answer is no. Is this a pattern to worry about? Not unless you're going to let the weatherman, who has super Doppler, tell you that it's got a good chance of raining out, like they often do say to us in Florida. 100% chance of rain, yet it never rains where you're at. How does that happen? Well, it happens. And this is nothing more than a potential pattern out there. And so we just want to be aware of the New York Stock Exchange, just like Michael and I were looking at with regard to light sweet crude. Hey, is it making any kind of topping pattern out here? Well, light sweet crude was not, or is not. New York Stock Exchange may be out here. And it's not just the New York Stock Exchange. We want to be paying attention to the S&P 500 because it too is moving higher with less energy out here. It too formed a shooting star. What does that tell us? Well, it's beautiful for pattern traders. It's beautiful for people looking for signals out here. It's beautiful for the non-believers. What you want to do is those of you that continue to try to take the short position here, the signals just aren't out there. Inside the S&P 500, you watch the price of 21.1922. If we're 21.16, if we see it close above that, doesn't have to be today, could be tomorrow, could be Friday. What it says Wednesday, yeah, so it could be Monday. Who knows? If you see it close above, that's a shooting star, right? Nothing more bullish than a failed bearish hammer. Here's the hammer candle. Last time we saw a bottoming hammer type candle inside of the S&P 500. That was on May 19th. That was at the conclusion of what? Of an A to B equals CD down pattern out here. If we go take a look at that, there's your 1-to-1 A to B equals CD to the downside. And that was at the formation of a hammer candle. That was telling you, guess what? You got a bottom inside of the S&P 500. So you take out that high from yesterday, and that will be very important, useful information. What will that information say? That says that the S&P 500 goes ahead and makes a run for its high out there. So we'll be paying attention to all of that. What else do we want to take a look at? We've covered the silver, we've covered gold, we've covered light sweet crude, we've covered a lot. Well, what haven't we covered? Hey, in the Tigers, somebody wanted me to take a look at FXE. So let's go take a look at FXE out here. FXE is, what is that, the China? I don't know if that's the China FXE. No, FXE, that's the currency. Hello, it is. I know that 2x4 that that I speak of, Sometimes you have to take that 2x4 and just simply bang it on my head out there, and then I'll actually go ahead and wake up. Now, the FXE is the currency shares there for the euro out here. Really tough. You got to have, I would say, when you trade these ETFs, for currencies out here, I hope that you're trading them from a long-term viewpoint. You're looking at more than, you're looking at holding this for a while. You're looking at some kind of major top or major bottom because you're only able to trade this for what, 6.5. You can add the extended hours. It's not the most liquid of assets out here, so extended hours, you're going to really get hosed on it, and I don't want you to get hosed. Today it's done 261,000 shares of trading compared to trillions of dollars inside of the actual currency pair out there. But what's the FXE doing? We really have to go pay attention to what is the euro doing. But right now, if we just take a look at the FXE, and then you're going to see gaps out here, and you're going to think that those gaps mean anything. The only thing those gaps actually mean is that there was just making up for the time that this wasn't trading, where the currency pair was. So when we get back from this break, let's at least go take a look at the currency pair, the euro versus the U.S. dollar. Let's go see if we can try to figure out what it's communicating to us. And it is in a rising price channel. And that says price is likely on its way up to 114.64, or maybe back to the swing point high, which looks like a shooting star on May the 3rd. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. So before we went to that break, we were beginning to look at the FXE. That is the ETF that tracks the euro-US dollar currency pair. But what we decided to do was we decided, let's go take a look at what the currency pair is actually doing, since that is the underlying instrument. Let's go ahead and turn off that little bottom panel on my screen out here, which would track volume, because you can't track volume with regard to currency. So this is where the meaning of the candles is so important out here, because this is the only place where we're going to get our messages, as well as the different patterns that are out out here. If we take a look at those patterns out here, let's go ahead and turn off our market profiles for the moment. If we take a look at those patterns, we can see that the euro, since it formed a bottom back here on December 1st, 2015, you can see that nice little rising price channel that has contained price. And what we know is that price had moved down back and slightly below this level back on May 27th. We saw that level get tested and rejected for 2 trading sessions, the 30th and the 31st. The reading really back then would have been, okay, that this was a false breakout. Well, it wasn't really a breakout to the upside. It was breaking to the downside, and price was likely to come back and test this bar out here, this little swing point from March the 10th. However, that's not what happened here on Jobs Friday. Instead, on Jobs Friday, you saw the euro go ahead and move much, much higher, get stronger versus the U.S. dollar. That means the U.S. dollar index, because the euro is a part of it, a big part of it, about 57%, give or take a few percentage points out there. That's why we've seen the U.S. dollar. It's one of the reasons we've seen the U.S. dollar index move lower. Now, markets don't end on wide-ranging bars. That's what you had take place on June the 3rd. What we had out here is we had 2 little sideways bars, right? You had a little doji candle that showed up, just one doji out here. That was on June the 7th, and then prices now moved higher. Price is now above that level out here. It's not really a continuation candle out here. It doesn't really qualify as a rising 3 pattern out here, but nonetheless, what this communicates to you and I is price is likely to head where? Back to the top of that rising price channel. Now, what's hanging out near the top of that rising price channel? That is that shooting star. Remember, we took a look at shooting stars inside the S&P 500 and inside the the Wilshire 5000 out there. And so we want to be paying attention to it. The last time we saw a shooting star in this currency pair was right here on May the 3rd. If the euro gets above that, forget about this rising price channel. Price will continue to rise, but that should become its area of resistance, which is right around the 116-ish area down to the bottom of that shooting star, which is around the 114.92. And at this stage of the game, with regard to the FXE, it says you should continue to stay in the trade, but pay attention to the currency pair out here, the euro versus the U.S. dollar. So another day, another dollar not really doing a whole heck of a lot. And we're not doing a whole heck of a lot, and that's because the NQ just simply is doing a dance unto itself. Now, that is different than the Russell 2000. The Russell 2000 continues to move to higher ground. Let's go take a look at the IWM. We'll finish it off perhaps by looking at the IWM. We can see that, well, we can't see volume-wise today. I'm sure if I turn that on, we're not going to see a whole heck of a lot. But what we can see is that the IWM took out a swing point with volume. That's the swing point from April 27th. That had volume of 24 million shares, and that was taken out with 26.8 million shares. How about that for memory? That says there's A to B equals C to up patterns all over the place inside the IWM. However, the IWM right now is headed to its swing point out here. A nice little key reversal session back on December the 2nd. So let's watch that candle session, 118.45. By the way, 22 million shares out there. So we hit that today, 118.57 we have. I don't know if that's the actual high, 120.04, 120.07. Let's just watch the 120. It's IWM ought to hit 120.07 and maybe higher. Hey, folks, thanks for being here on Wonderful Wednesday. Stay tuned. Our man, David White, our official polar bear here at TFNN. He is up next on the Tom O'Brien Show from 3 to 5. Don't forget, get over to the homepage at TFNN.com. Sign up for the Unchanged line out there, the Oscillator Unchanged line. It's going to be a great webinar this coming Tuesday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.